Hi, and welcome to Treasury Talks. I am your host, Colleen Davis, Delaware State Treasurer. Today, we'll be talking about cryptocurrency, what it is, what it means for the country, and how it affects you and me. Joining me today is John Collins, founding partner at FS Vector. They're an advisory firm serving some of the world's largest and most innovative financial technology companies. He is leading the firm's public policy practice. And John, you're a Delaware native with a fascinating background. Can you tell us some of the things that you've done? What has led you to your current career, and sort of what launched you here?
Yeah, and Madam Treasurer, thank you again for the opportunity and the honor to talk with you today about this, and hopefully it makes some sense to people and is useful. But I appreciate the generous introduction. I grew up in Townsend, Delaware, so the T in MOT. It's near Middletown is usually how I describe it to people because they don't know where it is. And graduated from the University of Delaware undergrad and went directly, got my MPA, Master's of Public Administration. And during that time, I got the opportunity to do a bunch of different things, but worked at WDEL as a part-time reporter, mostly in the evenings. And so after grad school, I got the opportunity then to go work for Senator Tom Carper in Washington, D.C., worked for him on a subcommittee of the Homeland Security Governmental Affairs Committee. Came back to Delaware for a year, managed his reelection campaign. He was successful in that reelection, so I got the opportunity to go back and work for him in DC, and picked up some chatter about cryptocurrency and Bitcoin specifically. There was a lot of talk about it, mostly in financial circles, but also amongst law enforcement and the intelligence community, about this emerging technology. Congress hadn't done any work on it yet, so Senator Carper thought it was a good idea to kind of get our arms around what this thing was and what it wasn't. And then after that, got an opportunity to go work for Coinbase, which is a digital currency company in San Francisco. And then after that, went to work for the American Bankers Association. They have a small international subsidiary. And so I worked with them to develop fintech policy programs. And then since that time, I've been advising companies in the cryptocurrency and then larger financial technology space. FS Vector, we started about 2 years ago, founded by a guy named Raj Date, who's probably best known for being former director of the CFPB, helped Elizabeth Warren build that from scratch. And then a guy named John Betcha, who is a longtime financial services and cryptocurrency lawyer and executive. Now we're about 15 people. We're growing, and we're advising some really fun projects. And in between, I guess my paid job, me and a few folks started a really small nonprofit called the First State FinTech Lab. We work on economic development, empowerment issues around financial technology, and also have an appointment at the Berkman Klein Center at Harvard, where I work on fintech issues there.
It's quite a convoluted tale, but it's really, really interesting, because you're utilizing all of those talents that you've developed over the years. But, many people, I want to kind of get back to cryptocurrency. We think about Venmo and PayPal when we think of cryptocurrency. Can you explain what exactly cryptocurrency is and how you and your company is involved in this space?
Yeah, so I would say this, both of them, both cryptocurrencies and a Venmo or a Square Cash or any peer-to-peer payments application, they allow for the transfer of value between people, okay? So both of those things allow for that. But the key difference is really around sort of the architecture and, ultimate function, or what you can ultimately do with it. If you think about the internet as we know it today, it's a layer cake of a number of different protocols, and all of those protocols allow for different things. So we're on protocol TCP, I think, right now with WebEx. Your email runs on SMTP, and these are communal protocols, right? It's the reason why if I can send an email from yahoo.com to gmail.com, because everyone's built on top of it. So blockchain is a protocol, and blockchain is the underlying technology for Bitcoin, which was the first cryptocurrency, which led to all the stuff we're going to talk about today. Blockchain allows for an internet of ownership. And a good example of that is if I create a Word document of some sort, I send it to you via email, you have a copy of that, but I also have a copy of that. That makes really bad cash, for example, where if I give you a $20 bill, I no longer have that $20 bill. So with blockchain, with cryptocurrencies, you can actually exchange digital goods or tokens and whatever representation of it. And then the second, I guess, main reason is, PayPal and Venmo are digital representations of dollars. Cryptocurrencies are their own medium of exchange. It's entirely different way of thinking about it. And they're entirely new payment rails because they're open. Those applications, even though they're really cool and advanced, they're still laying on top of really old payments rails. Going back to the protocol idea, they've been layered over time and not as efficient as they could be.
So what role would you say that, cryptocurrency will play or does play in our daily lives? What do you see?
So I'm going to give you kind of a cop-out answer to the first part, but I think the second part might be more interesting. And I also, am not going to be held to whether it happens or not, so I'll do it. But basically, there's not a lot right now. I mean, if you talk about daily lives of the average person, not a ton. It's pretty niche still. It's mostly being used for various day trading, frankly, and kind of exotic derivatives and, crime in some cases and gambling and people use it for political reasons because they have a particular ideology. And some people just use it because they're people that like to be on the forefront of technology. And so they're into it. But it's really small. I mean, we talk about it a lot. You probably hear about it a lot, but the total market cap of all the cryptocurrencies in the world is about 360 billion. It was this morning. It could be 460 by now. Walmart, I think revenue last year was like $540 billion. And that's just one company. But if you look at the future of where, you'll probably see cryptocurrency playing a role in your real life, it's probably going to be that the cash that we know today is going to be purely digital, actually natively digital. So there's something called CBDCs, which is a terrible acronym, but it stands for central bank digital currencies. And there's a lot of investment and I guess research into how the Federal Reserve, for example, could issue a digital dollar of some sort. So that's one thing that you'll probably see. And it can enable a lot of different things, better payments, faster. There's a lot of potential for better financial inclusion and access for people who are underbanked or not banked at all. And then something that's a little far afield, that's not has anything to do with payments, is something called non-fungible tokens, which is a terrible phrase to describe what this is. But if you think about the ability of blockchain to create unique items and allow the transfer of them. And you see the way in which, especially kids now, are living almost the entirety of their lives in a digital space. It is fair to reason that the things that we have known to be physical items will move to digital versions of it. That is an application I think you're going to see, especially if we move into a virtual reality environment that we could, this is really dystopian stuff perhaps, but here we are in 2020, but it's kind of fun to think about.
I like the idea that we're theorizing about what could be coming down the road, and so I love hearing it, and I think it's important that we're having the conversation. When I think about it, other countries are using cryptocurrency in a much different way that we in the U.S. are utilizing it, and so can you talk about that, as well as some of the way in which financial institutions the world's financial institutions might be impacted by cryptocurrency?
Yeah, for sure. And I guess I'll talk about the U.S. first. The U.S. definitely has the most companies, the most investment, the most developers, in part because we have these innovation centers in Silicon Valley and New York and all kinds of other places across the country. You have a lot of people that are using it for all the reasons that I mentioned earlier, and just a lot of development of people creating unique solutions and applications. In Europe, it's similar, although definitely not as intense. It's just sort of the nature of how innovation and entrepreneurship, I think, works there culturally. But then also there's been less interest in the general cryptocurrency space, partly because of regulatory reasons and partly because of, I think, cultural reasons. But you do see a number of smaller European countries who are trying to do some really big, aggressive things. Estonia is a good example of it, around this space, because they see it as the next big thing. It's a regulatory arbitrage play. They want to, be on the forefront of it. And then in Asia, it's, there's actually an enormous amount of what, you'd call retail interest in the space, much more than in the United States. Culturally, in many Asian countries, there is a very kind of word of mouth way of thinking through investment, family members and friends. And so some of these schemes just really caught fire, and you had a lot of retail interest that you did not see here. So, people's grandmoms and stuff like that. So that's, I guess, what you've seen in terms of the differences. I think China specifically, we talked about central bank digital currencies. They have actually launched one, and it's something that they've invested a ton of time in. And they're piloting it, I think, in 2 countries now. And in terms of financial institutions, to be honest with you, there hasn't been a huge impact. I think traditional financial institutions are interacting with blockchain primarily by doing various kinds of pilot projects that are relatively boring to the average person and probably wouldn't really be discerned by them. It's interbank transfers, it's back end wholesale payments stuff. Now, if you're going to do a central bank digital currency and you start having a direct, account with the Federal Reserve, then that's a whole different world, because it'll totally change the way we use banks as depository institutions. But there are definitely ways around that from a policy perspective, and it's probably unlikely, but that would be a potential theoretical, risk down the line.
Has cryptocurrency truly found a new place or a new purpose in the midst of the pandemic? I think that a lot of things that we've seen change related to the pandemic have been to drive us forward and to cause us to look at really innovative solutions to challenges that we face. And, if there is a new space or purpose as it relates to cryptocurrency, do you see that role continuing when things start to open up and come back in line with normalcy?
There's been a longstanding thesis, especially around Bitcoin, that it is a store of value. It's a safe haven asset, which means that when everything's going to hell, the securities markets, the value of the dollar, you will have this sort of gold, right? You put gold as a safe haven asset. It's a classic one. And so it will function as a digital gold. And there's a lot of reasons people have this theory. It's mostly political and sort of their own economic theory. And it really hasn't proven true traditionally. It kind of has proven true, at least up until this point in the pandemic. Now, is it because it actually is a safe haven asset, or is it because people want it to be and are betting on it? And I guess the question would be, is there any difference? But that's one thing that's been interesting to see in the cryptocurrency market, that it appears to be having more maturity or acceptance in the way that we think about traditional physical commodities. People don't want to use cash, and they really don't want to touch stuff, right? And so you saw a huge increase in electronic payments across the board, whether you're using credit cards or Apple Pay or any of the applications that we saw. People just didn't want to touch cash. So there's just been a huge increase in the adoption of those electronic payment mechanisms. Now, what does that mean? Well, it means a few things. So one part of it is that we were seeing a move to cashless environments in a lot of very specific stores. And typically, like in urban centers, you'd have a Sweetgreen and a SoulCycle and whatever else. And they're catering to like young professionals that have a little bit of expendable income. And they were all going cashless. Fine, I never carry cash. Like that's fine, and many of my friends don't. But what that creates is entire deserts and cities that are inaccessible to someone who does not have access to those, because they're underbanked or they're unbanked. And all they do is carry cash. So that was kind of going backwards. There were a lot of cities that were banning that, and now it went the opposite way. Governments were saying you can only accept, cashless payments. So that's been something that has been an interesting thing to observe. And it's very clear that this event, we're never going to go back to the level of cash use that we did before. It's just not going to happen. So that's been a dramatic change, and that will support all of the things we just talked about, whether it's cryptocurrencies, whether it's private payment networks, whether it's government networks. It's moving much more electronic at a much faster pace than we would have seen. And it's fueling development of all of these new payments rails that were already moving, but it's going so much faster.
It almost seems as though the pandemic has underscored the need to move in this direction. And I think you're absolutely right. It's going to be very difficult for people to kind of get back to the way we operated before and start to feel comfortable passing things back and forth and things like that. I think this is something that will definitely linger in our minds. And, I love the fact that you brought up the banking desert and folks that are unbankable or unbanked, because it is something that here in Delaware, we are well aware of. We certainly do have banking deserts. And when, I think that the pandemic really helped us to identify that a little bit and look for solutions that are a bit more meaningful. And I don't know about you, but I know that many of the stores that I frequented up and down the state were, posting signs that they had coin shortages and they were asking for exact change at times. Mm-hmm. So I think that there's definitely, an opportunity for this to be a solution to something and maybe multiple things that have been challenging, not just now in the pandemic, but have been difficult to find a real solution around. John, I really appreciate you joining me today. It's been a really very interesting conversation, and love kind of hearing about some of the innovations and how they're applicable and not just sort of a theory. Well,
thank you very much. I really appreciate the opportunity. It's been great to have this conversation.
Absolutely. We'll have to stay in touch.